Hello everyone, my name is Marcello Kolax and today we're going to have a quick look at European energy markets for the week starting the 25th of September 2023. Can't believe the year's almost over. Well, at least the summer is. So let's have a look at the TTF weekly chart first. And zooming out, we can see that the market has been caught in a sideways trend in a rectangle for quite some time. So this is also the reason why the midterm is still bearish. Now, September is nearly over. October is coming up. The winter is starting, and the market seems to be getting quite I don't know, nervous about any type of bullish news. So after what was 1 year of losses, I do believe that the rectangle that has been forming here is a basing pattern and that eventually upside resolution for the rest of the winter is most likely. Um, this is a change from what I thought at when we were still in June, July, because back then it still looked like a small correction, but now there's no reason to believe that with winter approaching that we would be moving anywhere below 22.85. And that becomes especially clear on the daily chart, where we can see that we have most recently we broke above this sideways range that has defined the near-term sideways trend for a couple of weeks, and now we did have two consecutive closes above it, so that turned the near-term outlook bullish. Of course, maybe a little bit of a correction might be reasonable, but overall the idea is for the market to still break higher overall. A good sign is this 20 exponential moving average. As long as we stay above it, I wouldn't be too worried. And also, as long as we are staying below 33.76, we're still forming higher highs and higher lows, so that eventually maybe we'll be reaching or testing at least the upper end of the rectangle near 49.95, which is 50 essentially, which is important psychological number. And this little up leg, the two consecutive closes on the daily chart, look like this on the 15-minute time frame. Yes, we did go a little bit above it. I believe we were too enthusiastic about gains. So it would be okay for the market to moderate lower a little bit, but ultimately swinging higher. Now, I would abandon my bullish intraday view as soon as we start breaking below the channel, which would, yeah, probably be around a 38.65. And this doesn't mean that the near-term bull trend is abandoned. Yeah, it just means that it might take them a little bit longer. So this here is this uptrend channel on the 15-minute chart. Exactly the same applies to the NBP, which has seen, yeah, more or less the same, but the levels, of course, do differ. So let's have a quick look at the NBP. And here we do see having all three charts next to us. There you go. That exactly the same thing is happening here. On the weekly chart, we do have this rectangle that has been at the end of this year-long downtrend. You can see here we are not even, as on the TTF, we are not even hitting the lower end anymore of this rectangle. So that would mean eventual upside resolution. This drawing the upper end of the rectangle at the wick is a little bit conservative. So if you wish, you could just go somewhere in the 103 area, maybe 111, just to pull it a little bit lower. And that simply is because this here is probably not representative of real market action, but it's definitely like an important level to note of. And if the idea anyway is for the market to move significantly higher, then I think there's no harm in being a little bit safer. But of course, if you're a bit more aggressive, you can pull it to, I don't know, near 100, that area. The rectangle, the most immediate rectangle target is near 200. So the rectangle target is just the width of this triangle then applied to the breakout direction. So as soon as we were to break above 125.3, we could easily see the 200. Then on the daily chart, exactly the same thing happening here. So we do see that there you go. That the oscillators are hinging a little bit, but overall the market is still moving higher on the MACD. So what does that mean? Yes, we do have the push, the clear push above the 20 EMA. We do have two consecutive closes above this range, above, what is this, 9898. And we would probably see a decline early this week, maybe on Monday, Tuesday. This is absolutely reasonable. But as long as we keep making higher highs and higher lows, overall, I would still see the upper end of the rectangle tested at 125.3, which is this week. And this move lower early this week can be seen here as well. So overall on the 15-minute chart, we are on this up within this uptrend channel, but overall there is the idea to move a little bit lower, at least if we were to push this morning below 10156, so the 101 region or 100 region, then easily we could test the lower end of this channel, which is near 9695. Okay, so much to the NBP. Now, the next thing that I would like to look at is actually, um, let's have a look at carbon. On the carbon markets have been quite interesting over the past couple of weeks. Very clear signals in this downtrend that they had, and then it got a little bit nervous for the bears when we moved a little bit higher. But what does it actually mean for the market itself? Well, let's have a quick look. Okay, so here again, what I want to do is I'm putting all three candles, all three charts next to each other. So here, this is the long-term trend on the weekly chart, and you can see we have hit the 100. It's a very important psychological level, and also the upper end of our ascending triangle. Usually, by textbook, these triangles are resolved to the upside, but not so much in our case, also not so much in the European energy markets. So what we see here on the weekly chart is clear break below that turned the outlook bearish after the second close, and tools did confirm all of that. And you can see that the oscillators are pointing lower, the MACD is pointing lower. We are clearly below the 20 EMA, the weekly chart. So I'm not too concerned about this move back inside the triangle. As long as we keep swinging overall lower, I think we are still in a downtrend. And I would say the most important high now is 93.53. So if we were to push just a little bit higher and then lower again, I would still be with the midterm bears. On the daily chart, this down leg or this downtrend looks like a channel. And can you see how clean the swings have been and how good the oscillators did react to that? Now, what we have here in this, this is a weekly triangle, it's a daily channel. We do have fib retracements. We have now hit the 61.8, so you're tracing this down leg all the way back up, and we have the fib, we have the channel, and we have this high. So we have three very strong resistance levels here, which maybe could lead to maybe one more strong day or something. But overall, the idea for the market is still to move lower. And as long as we are swinging within this descending channel, the near-term trend is bearish. Now, if we were to break above this, it would undo the near-term bearish trend. Let's have a look at like this up leg here, what it looks like on the hourly chart. Let me zoom out, remove this. So it is this up leg here. This is pretty steep, usually unsustainably steep. overall, we are moving higher. Can you see here? So the near-term trend is bullish as long as we are within this channel, as per the Clever Markets methodology. But overall, we haven't made any new peaks or any new troughs really here. So the stochastic is pointing lower, and so is the MACD. So overall, I would believe that early this week we would be breaking below the 23.6% Fib retracement, which is the 84.8% Fibonacci retracement. Yeah. Usually corrections can go until 61.8%, which in this case is 82.66 euros. So there is room for losses, and then we would simply have to see how far we go. And can you see how this aligns with the resistance areas on the daily chart? So here the idea is maybe a little bit higher, but ultimately probably we'll see a break below this. That will be in line with the daily charts, maybe one more day higher before we continue in the downtrend. When would I be wrong? I would be wrong if we actually bounce off and continue to make new highs above 86.13. Then my bearish stance would for the daily chart would be resolved, and yeah, the intraday bullish stance would continue. Let's have a look at Brent. Also here again, I think Brent has made some really good gains, and all you Clever Markets readers, listeners, if you have been following me for a couple of months, then hopefully you did get in the low 80s. But yeah, let's see where we are now. Maybe there is some good entry opportunities still. So we do have on the weekly chart this big rectangle that was resolved to the upside, and the midterm outlook overall is bullish, and we do see that with volume rising on the up legs, old resistance turning into support. So this level here, resistance, broken, support. We do have oscillators swinging higher. This is good. We do have the MACD pulling higher. This is also good. And yeah, overall does look pretty bullish. Then on the, let me make this smaller. There you go. I'll close these. I'm using a new software for everyone watching me, so I'm still in the process of figuring this out. So apologies. Okay, cool. So there's the weekly chart. Looking onto the daily chart, we can see this uptrend here is essentially this channel, and we can see that, yeah, actually, indeed, we are um, we have hit a resistance area here, and we are most likely to move lower, as we can see on the stochastic, the MACD, just for a little dip. But overall, the midterm uptrend, and also for that matter, the daily uptrend within this channel remains unchallenged. So I would expect as something like this, like a move to the lower channel boundary, which would be also, can you see this old resistance, which may now turn into support. So I do see the market to move lower, but if this area holds in, what is this, 88, 87, 88, then ultimately would still be heading higher. The goal is, or the target is 100, because it is the rectangles on the weekly chart. The rectangles target is also a psychologically important number. So I think 100 would be a good level to look out for. Then we can see on the 15-minute chart itself, it does have its own little rectangle. This is not the weekly charts rectangle. This is like one candle representing 15 minutes. It's a different one, yeah. So as long as we are within this, I am calling the intraday neutral. And we have hit a little bit of a peak here. You can see as the market moves higher, volume declines significantly. The session ended, there was next to no volume anymore. So I wouldn't be surprised if we actually head lower. And then a break below this rectangle at 92.76, then we would probably see this corrective move. That's a 15-minute, that's a daily chart. a break below this area then would probably launch this entire up leg. But you can see, as long as we are still above the rectangle, the weekly chart, it's still okay, all looking pretty bullish to me. Then let's move on to the next market. Let's close all this. What shall we have a look at next? Let's have a look at coal. I think coal has been often neglected. Who knows? Maybe it will become important again at some point in the near future. All right. Coal hasn't been all too exciting. It has been caught in a sideways range for quite some time. Um, Especially on the weekly chart, it becomes clear um, that we do have a little bit of a triangle going on. So we can see we had this long extended downtrend that goes back all the way to 2022, September 2022. And now we're in now it's been going on for months. We are in this triangle that is squeezing price and increasing the tighter range. So it is also this triangle that keeps the midterm outlook neutral. So what you would like to see is a break above or below in order to resolve it. Triangles in themselves, they have no inherent breakout direction. So that's why it's so important to look for early signals to get an idea of where we might be heading. Then moving in, we do see on the daily chart, so this is the weekly charts triangle, okay. Neutral on the daily chart are also neutral within the rectangle. So you can see we have a neutral rectangle pattern within the weekly charts, neutral triangle pattern. It's a kind of boring on call right now. We have hit this upper end, and we do see stochastic gradually moving lower. Nothing really is happening on the MACD, and you also shouldn't use tools like the MACD or anything that's based on moving averages in a sideways trend. So here it looks a little bit boring. So if you're looking at trading opportunities for coal, then probably the intraday market is more suitable for like early timing. To time an entry or a short or long entry in line with these boundaries. But would you have a look at that? This here, by the way, is the weekly triangle boundary. Yeah? Even on the 15-minute chart, we are neutral. What is happening? So here's the thing. If everything is neutral, that kind of gives us time to reset. And in those periods, what we can do is we can look for early breakouts on the lower level time frames. So that means, let's say the market breaks lower, below 38.2% FIB retracement, which is 127.73. A break below this could very easily lead to the daily charts, then lower rectangle boundary, and a break below the lower rectangle boundary could lead to a test of the midterm triangle. So can you see how nicely it would like is if we break below here, then we move there. If we break below here, then we move there. The reverse is true for the for a break above. So if you were to move above 130 dollars per ton, then very easily we would test the daily charts upper rectangle and then of course the weekly triangle boundary as well. So they're all bunched up essentially up here. So a break higher would require real bullish resolve, and we would be able to identify this from the 15-minute time frame already. So that's why for timing entries and exits, it is always recommended to have a look at the lower level time frames. Let's have a look at Henry Hub. Henry Hub has been, I believe, also in a sideways trend for quite some time. So it isn't all too interesting. So that's why it's kind of good to maybe trade the boundaries on the lower level time frames. But let's have a quick look at what is actually happening. Okay, on the weekly chart, I am zooming in. And we do have a little bit of a rectangle going on here. So you can see we moved lower from this downtrend. Now we have this basing pattern. And ultimately, yes, I do believe that the market will break higher. We've only seen lows in the two uh, dollars per MMBTU, I think like just twice in the past, however many years, 10 years, I believe. So there's no reason for the market to move lower. So anyone still bearish on Henry Hub, I don't know where you're getting this from. Okay. So ultimately, you can see that this entire down leg I put on the FIPS. So the 23.6% near 3.3 is kind of close to this rectangle upper boundary. And so this would be an important level to take, and I do believe that eventually we will. We have also moved gradually above the 20-week exponential moving average, so this is looking good for the bulls ultimately as well. You can see the tiny, tiny candle bodies show that there's not really much of a decision driving force at the moment. So this is a time we would be looking at fundamental news and in how far any bit of like bullish or bearish news which actually would actually move the market, because we can see even on the daily chart we are in a sideways trend, right? On the lower end we have 2.5 and on the upper end it is 2.84. So a break higher, which I think is most likely, eventually would then easily test the rectangle and would activate the rectangle upside target and take it from there. But, and we can see that the MACD has flatlined as it should, so do not take any signals from the MACD right now. Much rather look at oscillators. Oscillators here, we can see this one is heading lower right now, and but we are not seeing, we are seeing higher troughs and we are seeing lower peaks. So that means, well, even this tool is more or less sideways, which is in line with this trend here. So yeah, I think we would have maybe one or two more sessions of losses ahead of us. And then the market has to make a decision to either continue swinging or breaking lower. As things stand now, there's no inherent breakout direction, but ultimately, I don't know. I don't see a reason for the market to break lower. Now, having a look at the 15-minute chart, what we see here is, let me zoom out a little bit. This is the most recent down leg that we just saw on the daily chart. And this is gradually breaking higher, so this level might break very easily early this week, and then we could see maybe a push higher ultimately. We can see that support at 2.6 has been tested multiple times, and this here is bam, 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 so 4 times. So this here is pretty firm, and we've got this downtrend channel that has also been hit 1, 2, 3 times. But as things stand now, with oscillators edging higher, 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 uh, this could be at least a test of this level. If we were to break lower, this is also possible, and we would probably see a retest of 2.6. So since all markets, all three markets are sideways right now, we really have to have a look at the lower level time frames and see how we resolve 2.6, then we break even lower, or if we break above the channel near 2.6, I don't know, what's this, 2.66, then we could see a gradual increase of the markets. Let's have a look. I think that's it with European energy right now. Let's have a look at some currencies. So let's have a look at Euro Pound at first. Let's open that up. Currencies always behave very, very differently to the European energy markets. I feel that on the currency markets, the technical patterns and signals are a little bit more respected, simply because technical analysis is a little bit more common on these more sophisticated markets. So I believe that's why ultimately having a good understanding of technical analysis for currencies wouldn't be harmful. So we can see that euro pound on the weekly chart we are within this downtrend channel, and ultimately the midterm downtrend is bearish as long as we are within this channel. However, there is signs of weakness. We do see that oscillators are making higher troughs, and we are still have maybe one or two good sessions before moving into overbought territory. We can see that this called divergence. We can see that the MACD is not making lower lows anymore, but the market is still. So that would suggest an eventual break higher. We also did see that we broke above this 20-week exponential moving average, but as per the technical Clever Markets methodology, we are still bearish, and what we want to see truly is before we make a bullish call or a neutral call, we want to see a break above 8701, which is this peak. It is the trend channel as well, so above it, then we can talk about bullishness. On the daily chart, we do see zoomed in, so this is the weekly charts channel, yeah. We do see that we have resolved a triangle. There you go, and we did generate an upside target at 8767 with the move above the triangle here. So this triangle has now, I mean, the target is up here, so maybe some bulls are aiming for this. We can also see that the swings are a little bit nicer here, and now we are pulling higher. We got a bullish signal here on the MACD moving above the zero line. So yeah, I would say that this triangle is a basing pattern, and there is potential for the daily candles to break higher. And then if we do have like one or two consecutive weekly closes above this channel, then absolutely we could turn bullish there as well. Now, on the 15-minute chart, now it's getting a little bit tricky. We do have a rising wedge. Rising wedges are usually resolved to the downside, and it does seem like we have moved quite a bit into it. We have the weekly channel resistance on the daily chart. On the weekly chart, we have the channel resistance, this level here. Then on the daily chart, we have this preceding high, 8701. And on the 15-minute chart, we have this rising wedge resistance. So this here is pretty, would require some real bullish conviction for the market to break higher. So that's why I do believe that actually, maybe at the start of this session on Monday, we are breaking lower. And the target is near 8658, which is also this trough here. So the rising wedge target, if we break lower here, is in this area. Now it's getting confusing. So what is happening here? The weekly chart is bearish within the descending channel, but the channel is being challenged. Okay. On the daily chart, we have a triangle that was resolved, and we have a target somewhere up here. So maybe there's an encouragement for the market to eventually push higher. Okay. But for the intraday, for the morning on Monday, it looks as if the market has the potential to move lower. So what do we make of that? So this is good. This is called multi-time frame analysis. And ideally, if you're, let's say you're trading on the daily time frame, it's always good to have a look at that one higher level and one lower level time frame. And that's what we are exactly doing. So it looks as if we might see a marginal decline at the start of this week. This would be in line with the 15-minute chart. But ultimately, there still is hopes for the bulls to eventually push higher towards the triangle target. So week open to the week, potential gains thereafter. Now where TA comes in is, when do we know we are bullish? As soon as we break above 8701, which is this high, and it is the channel. And when would we be wrong? We would be wrong if we move below. There you go. If we start, if you do not make higher highs and higher lows anymore, so if you would push back into the triangle, maybe move below this level here, which is 8566, then you would know that our bullish uh, thoughts would be wrong, and then we would readjust and reevaluate. Can you see that the markets are making indications, but we don't know for sure. We're just prepared for every eventuality. So there was euro pound. Let's have a look at euro dollar maybe. Or dollar euro. All right. The charts are loading. And here we also, as always, start on the weekly chart, simply zooming out a little bit. And there you go. Okay, this is the weekly, daily, 15-minute. So we can see like from this downtrend, also we do have this rectangle basing pattern. There's potential for the market to eventually move higher or lower. So rectangles have no inherent breakout direction, and we are not at some sort of like important trough as it was the case for Henry Hub, for example. Yeah, very, very different picture. If the rectangle would be forming down here, then I would say, oh yeah, maybe it is a real, maybe a bullish reversal. But this here just appears in the, more or less in the middle of nowhere. So there is a chance for the market to just as well to break lower. So as long midterm neutrality is maintained within the rectangle, which is 9061 and 9493. We do see a little bit of stochastics coming down, hinging, so there is the opportunity for the market to rather move lower, and but ultimately there would still be potential for eventual upside resolution. But we need to see that in context with the daily chart. So in the near term, the market is also bullish as long as we are within this rising channel. But you can see we did struggle to move above this high. So what is most likely is a little decline lower. We also see this on the stochastic that doesn't make new highs anymore. And we do see that the MACD is flattening out as well as the market moves higher. So that is divergence, market moving higher, tools not making any advances. So I would say that it's very likely to move to 9302 um, to just find some support here. And at this point, the market would have to reevaluate. If we break lower, then the uptrend would be over. Or if we simply continue to swing higher to eventually make it to 9493, the weekly charts rectangle boundary. Now on the 15-minute chart, we do see that, yep, this is not a nice support line. This is more of a support area. Sometimes it's okay to draw uh, the lines or the levels with a crayon instead with a sharp pencil. So in order for the bears to continue, I want to see this entire area cleared more or less, which is a wide area to be honest. But simply the market couldn't find any agreement here. So we did end the week fairly bearish, and tools are confirming that. So, but extremely bearish days or extremely bullish days are often followed by a little bit of moderation. I don't need to look back far. I can already see it, like strong move, counter move. I don't know, strong move, counter move. Yeah, strong move, counter move, strong move, counter move. So if you have a like a really strong bearish move here, maybe you see a little bit of moderation. Maybe the trend reverses or continues. We will know that as soon as we break above this trend line. And then for those who want to play it safe, above this level, 9398, or the bears would be back in charge below 9376. All right, that was dollar euro. Now let's have a look at the last market. That is oh, and that is the dollar pound. All right, so while this is opening, you might not hear the difference, but I do have a very nice new microphone, but I do understand that audio quality still is not all that good. That's because I'm working, I need to adjust the software just a little bit more, and then hopefully it will be all fine next time around. And then you can get these smooth jazz type of voice. Hopefully, doesn't put you to sleep. And maybe in the long-term future, I don't know, maybe I'll take some, I'll start including my video as well. Not sure if you want to see my ugly mug presenting the charts, do let me know. Okay, let's have a look at the weekly chart. So what we see here is that we do have a falling wedge going on. There you go. And falling wedges are usually resolved to the upside, and that's exactly what happened. We are above the 20-week exponential moving average. We have pushed above this level here, so which now offers support. So that's all looking good for the midterm bulls. We also see that the MACD is moving higher, and overbought oscillators are nothing to worry about. That simply means we're making new highs, so that's good. That's not a bearish signal at all. So here, this is the weekly charts falling wedge, and this is the daily charts rising channel. So zooming in, we do see that, yeah, very nicely, we are swinging higher. Everything is looking good. But we also do see that, no, sorry, yeah. So the stochastic is pushing higher, new highs, new lows, all pulling higher. This is good. Um, the MACD is also looking fine. Can you see this? But it seems a little bit steep, a little bit unsustainable for my taste. And we did close outside this boundary. So everything is looking very, very bullish, and there's no signs of the market moving lower. But usually this is unsustainable because another close and another close above the channel would mean uptrend acceleration. And that seems, I don't know, a little bit much. So let's have a look at what the 15-minute chart is saying. We also have a rising wedge here, and rising wedges are usually resolved to the downside. And we can see that as the market moves higher, volume is declining. So early this week, we will see that we could potentially break below 8163, which then very easily could lead to the lower end of the rising wedge, which is at 8146. And as these patterns usually resolve to the downside, we would then establish a downside target near 81, down here in this area. So ultimately, the idea is for the market, yeah, we can squeeze a little bit tighter, and we would know at this point at 8146 if we are pulling tighter into the apex of this rising wedge, or if we are breaking lower. If we break lower, then this would be in line with my thoughts of this daily move being a little bit overdone. They could see a little bit of a correction lower, which is perfectly fine, before maybe swinging higher. All right, that is it. That was the weekly outlook for starting September 25th of September 2023. I hope you did enjoy that. If you have any questions, do let me know. If you're not already connected with me on LinkedIn, then do so. My name is Marcello Kolax, Marcellokolax. Everyone have a wonderful week ahead and see you around. Thank you and bye bye.